Guys, welcome back. Happy Sunday to you all. Nearly the end of the weekend, but don't stress. It's a new trading week tomorrow. So the aim of today is I want to try and put a bit of an educational video together. Really, I want to just try and point out supply and demand on the daily time frame and the 4 hourly time frame. So I will look for it on both time frames and refine it as well and tell you why and all that sort of good stuff. So supply and demand is a very vital aspect to anything in the world. Basically, the world operates through supply and demand. It's simple as that. There's no, I suppose you could say that is a bit of science behind it, but it is all supply and demand. Petrol and diesel in your cars, that's supply and demand. When the petrol station is running out of petrol, it needs more petrol because to keep up with the demand of people wanting to fill their cars up with fuel. So that's just like kind of a little bit of a simple analogy to try and explain the basics of supply and demand sort of thing. So that being said, we've got Bitcoin here in front of us on the daily time frame. And you can see that I've got two red areas, a red area at the top and a red area at the bottom, or red lines. So what we're concentrating on today is the price in between this area because it's relevant. It goes back to March. And we want to look at this because it's relevant, which I did just say. It's relevant for multiple reasons, really. And what I mean by it's relevant is you want to look at the relevant levels within this price area. You want to look at the supply and demand zones within this price area, is what I'm saying essentially. So that being said, it's quite there's plenty to be looking at here. There's plenty of demand and plenty of supply, but some of it's not as good as other bits. And considering we're at all-time highs on Bitcoin, it's going to be quite hard to pick out real high quality supply. So we'll get into it, and I will do my best to try and explain as much as I can, and just give you a rough idea of it, basically. So already what I've seen here is I've seen daily demand. So this is daily demand. It's not not a very big area of demand, but it is good daily demand. And the reason for this is you've had a lot of inconsistentness around this area. Price is going up, price is coming down, price is going up, price is coming down. But then all of a sudden price breaks out. So that is demand. That's in these candles here. It's not people's money trading behind their laptops and trading behind their computers and retail traders in their bedrooms or whatever. It's not people like that are generating these sort of candles. The people that generate these sort of candles are big institutions, hedge funds. They've got a lot of money at play, and it's that volume of power when they input money into the market that creates these candles. So that's what's happened. So essentially they have created demand. They liked price around between 109 and 107. They liked price in this area. They thought it was a good price level, basically. So they've put price up, and then that is the all-time high, the most recent all-time high on Bitcoin. So they've pushed price up. So in an ideal world, a lot of you would be looking at this, wouldn't it? A lot of people would be looking at this. A pullback down to this demand and a reaction off of it. Yeah, that could happen. But just because there's supply and demand around it doesn't mean that they are going to react like we want them to react every single time. There's a lot of other variables included into these demand zones and supply zones, which you also have to consider. So that being said, we've marked up daily demand here. This isn't really, I wouldn't really say this is demand. There's no real chill period before it took off. It's sort of it's tapped into this daily demand here and took off. So this demand is now original. Nothing's hit it yet, but this is a reaction of this, and this is a rally-based rally. So that's also demand. Rally-based rallies on the wider, nearly got hit on the wider version. This is demand as well. So level on top of a level in supply and demand terms. This is. So we'll mark these up properly. Like this. So these are the most relevant demand levels in this period that we're looking at right now. That if I was marking this to analyze, this is what I would, these are the levels I would particularly take note on. So now we've got a bit of a rough idea on the daily time frame. There's no real, unless I would like to mark some supply up here for you. I probably could on the 4 hour, so we will have a look at that. But with this up here, this is just nothing at the minute. This is creating either supply or demand. It's in the process of creating it as we speak, because we're in live market, because crypto, you can do whatever over the weekends and the market still moves. That's why I wanted to pick Bitcoin. So on the daily, this is just a bit of a mess, really. It's with what's going on. This is very indecisive. It's market consolidation is the exact term for it. So we'll go on to the 4 hour, and on the 4 hour, this is probably, if you didn't have all this mess here, imagine you couldn't see all of this here, and you just saw this section. And we just saw this section, you would say this is good supply, because you've got basically a very clean move down, and that's an indecisive candle there, that's an indecisive candle there, then the volume's coming in, and then you're getting a decisive and then a very, very incisive candle. So I don't want to say that's supply, to be honest, because it's just been too much. This whole area is really hard to call with supply at the moment. But then on the 4 hour, so we mark this area up on the daily as daily demand. That's good daily demand. The difference between what you're probably thinking, well, what's the difference between that and that? There's quite a lot, to be honest. It's not as long, but the candles are also printing cleaner. You know, price is moving nicely. Here it's a lot of wicks up and down, up and down, up and down, you know, up and down, up and down, up and down. That's a lot of indecision. And considering we are again at all-time highs, it doesn't really know where it wants to go. So the 4 hour demand I've seen is this here. That is good 4 hour demand. Higher the time frame demand, supply and demand, the more accurate they are. But again, these supply and demand levels, everything within these markets, it's not a certain, you know, it's just levels, it's guides. So you've always got to be mindful of that. So like a typical supply and demand trade that you would take here you've refined it for a level on top of a level, essentially, on a 4 hour. So this could be like a nice intraday trade. And what in terms of intraday trade, you would set alerts around here. I've already got all my alerts out, but you would set alerts around here, like an alert there and an alert there, and you would then wait for price, hopefully, to get down to here. Put your stop loss around these sort of areas, covering below these demand wicks, and then you would then look to target the highs. So that in itself, that's a day trade, potentially 2 days trade. But that's a nice little trade. But if price come all the way, so the ideal scenario is this. But price could also just do this, hit your stop loss, and then go up. So now your question is, what do you do in a situation like that? So in a situation like that, prices come down. It's not had the rejection of demand like we were hoping. It's broken through this demand. So what do you do? Well, it's simple. You've put a stop loss in place. You've been taken out the trade. So you don't just re-enter it, because that'll be revenge trading, because you're trying to get back that loss. You would just chill out. So prices come down to here. It's broken the demand, taking your stop loss out. You've now got a second chance at a trade here. And this is this demand down here. So that's where the term level on top of level comes in. You've basically got 2 attempts at a trade, essentially. You get taken out in the first one, you wait for the second one. And then if there's another one below that, you'll then wait for that. There's no science or art behind it. It is what it is. So that is what you would essentially do. You would wait for the second level, and then you would see how price reacts around that level. But then you could say, well, what if price goes through my level there and then takes me out there? Well, then you're probably on the wrong side of the market. And as price on the 4 hour is going to be trending down, it's going to be tickling down nicely. On its way down, it will create supply. So we're going into demand, but on the way down, it will be creating supply on the way down. So when that sort of thing happens, for instance, we'll take this off. We'll take these off, and I'll try and do something. So for argument's sake, price is created supply here. Price is created supply here. This is supply now, all right, because it will create supply on the way down. So price has broken this demand. Sweet. We've been taken out the trade. If price doesn't continue to go lower, you could wait to see what the reaction is around this area. And the reaction around this area could be coming up into areas of supply that it's created. So obviously the candles haven't been printed yet, but this, hypothetically speaking, is newly created supply. So we've had a break of demand. This is invalid. We've pulled back following the market structure, because markets move in structures and waves. So healthy pullback, potentially not that far, probably down here. But you would have a pullback, and then you would see how price reacts into this supply, this newly created supply. So you could then have your entries around these areas and your stop loss there. And then you would then, basically, you'd be looking for this, because you've got a nice target. Just be careful you don't start creating new lower lows and higher highs, etc., etc., and price doesn't genuinely want to go down. That's another observation. But price now leaves supply, comes down, takes these lows here, because there's nothing in its way now. This has been taken out. So it comes down to here, and now we've come into this bit of demand. So now you could then just wait to see how it reacts. In a perfect world, in a perfect scenario, in perfect examples, I could show you examples of price literally wicking into the demand and pulling away. Yeah, they do happen. These trades do happen, but it takes a lot of work to find them particular trades. Well, I don't say a lot of work, but more variables, shall we say. So that's pretty much it, really, for this area up here, for the supply and demand that's relevant to hopefully give you all a little bit of an insight. So we'll go back out onto the daily. We'll remove all this. We'll go back out onto the daily. And we were looking between these areas. So these demands were marked up here. Bang, bang, like that. We've got a rally base rally, so drop base rally. So, and another thing to consider, when zones are very close to one another, you could just incorporate it into one big zone. But when I say you could just incorporate it into one big zone, in terms of trade management, in terms of a trade, you just got to bear this in mind. You're incorporating all the levels into one, same as incorporating all the money you're willing to lose into one. But the risk to reward might not be as good. Like here, you're just 2 to 1, just about. So you got to bear in mind. So what would you rather do? Would you rather take a chance, get taken out on the first level, wait a little bit for price to get lower, and then re-enter? Do you know what I mean? So that's something to consider. More demand down here. And the reasoning for marking of these demands is price is very indecisive, but for not a long period of time, only for a couple of days. And then all of a sudden we have a big push out of it. Up into here, I think one thing to consider, I'll go back a little bit further soon, but one thing to consider is we are like at all-time highs, like ridiculously all-time highs in terms of Bitcoin. So that is one thing that you do need to consider. No wonder you're getting so many indecisive candles up and down, because A, it's Bitcoin, it's crypto, and C, it's all-time high territory where there is no traffic in its way. It could quite happily just go. But in terms of from a supply and demand perspective, it's not healthy for it to just go, because it needs fuel. Essentially, it needs fuel. So this here is what you would say like a rally based drop. This would be. So you've then dropped in and created this demand down here, and then the demand is then pushed through and then created demand again, and then another push through up. So this is what you would call a rally base drop followed by a rally base rally. I'm pretty sure there's a lingo for this one here as well, but I can't remember it off the top of my head yet. It'll come to me. Always comes to me. And yeah, that's pretty much that, really, to be honest. I mean, have a look yourselves. Jump on the charts, any chart, and just look for these key areas. It will take a long time. It will take a long time, and you'll be like, what is he talking about? Like, I can't see none of this. No, it takes a long time. Like, it took me months until I could, really spot zones. And even on the 4 hour, again, you get into the 4 hour. So all these are daily zones, but then you could get into the 4 hour and then you can refine these daily zones, which is what I really like doing. So, and that's where you could get a better entry in terms of like end of wicks just wicking in. So this could be a 4-hour zone here, 4-hour demand zone. So best of both worlds, the risk to reward you could have on this could be really, really good. Basically, you would take an entry up here, but then put your stop loss there. Put your entry on the original daily, but you're tightening your stop loss. And then basically when price gets down around your stop loss, and if it does take you out, then you've got an even better entry. As long as price isn't breaking this lower area of the demand, you've got some pretty good entries. So this is something to look out for on Bitcoin. And in future videos that I'll be doing, I'll incorporate other stuff to what I see visually. One thing I am just going to say now, just because it is there on the chart for you to see now, is these clean candles. These clean candles. One of my philosophies is I love clean candles. That is one of my philosophies I live by with my trading, is the clean candles and clean moves. So, and that's one thing I've looked for many years. So in terms of when this does decide to come down and break these lows, you'll probably get a real clean move down. And it'll be really interesting to see what it does when it gets into this demand. So I hope you took something away from this. I hope people picked something up. Any questions, feel free to just ask me anything in the comments, and I'll do my best to answer as much as I can about anything within the markets, especially supply and demand. But all I'll say is you can't beat supply and demand. Supply and demand is the framework of our planet. It's the framework of absolutely everything and our planet. So just bear that in mind. All right. I hope this helped, guys. And throughout the week, I'll be going back to doing, trade updates and all that. And I've got some pretty cool stuff coming as well. So yeah, hopefully next week's going to be a good week. I'll catch you later. Cheers.